Over the years, I've noticed that many people who receive a 1099 are not aware of the tax write-offs that they can take to lower their tax liability. Every year, a lot of 1099 workers overpay their taxes simply because they are not aware of the tax write-offs they qualify for. My company is on a mission to change that. My company is passionate about teaching people financial literacy. So, my podcast, which is called The Legacy, is going to be doing a series of podcast episodes focused on giving financial guidance to 1099 workers. We are going to be talking about tax write offs, bookkeeping, saving, investing, retirement planning, and any other topic related to 1099 workers. The episodes will be structured as discussions, group discussions that are very interactive and engaging. Also, as part of the series, we will be launching the $10,000 challenge, in which we will be helping people reach the milestones of having $10,000 in their high yield savings account and another $10,000 in their Roth IRA stock index fund. And now in this video, I'm going to give you a quick preview of 5 of the main concepts that we will be discussing during those upcoming episodes. Number one is this: always get paid in your business name. Always get paid in your business name. Getting paid in your business name will help you to keep your business finances separate from your personal finances. Number two, track every penny. Track every penny. Tracking your money promotes awareness. And when you become fully aware of how your money is flowing in and out, you are in a position to optimize the management of your money. Number three, take advantage of the tax write-offs you qualify for. Oh, this is a big one. Take advantage of the tax write-offs you qualify for. As a 1099 worker, you are classified by the IRS as being self-employed. In other words, you have your own business. And therefore, you can write off any expense that is ordinary and necessary for the operation of your business. That can include a lot of expenses such as education, training, cell phone, supplies, equipment, mileage, advertising, contract labor, professional services, home office, and anything else that can fit the description of being an ordinary and necessary expense. Number four, systematize your money. Systematize your money, because things that become part of systems become easier to control. Things that become part of systems become easier to control. So systematize your money. For example, here's a system, very powerful system, right? Where, you get paid in your business name. And so when you have that business income, it goes into your business checking account, okay? And then once it's in your business checking account, you're going to take a portion of it and you're going to move a portion of it into your business savings account, which will be a high yield savings account, right? Always use high yield savings accounts, right? Because high yield savings accounts pay much more than regular savings accounts, right? So, business savings account. And the purpose of always taking a portion, like at least 25%, and putting it into, your business savings account is so that you can save to pay quarterly taxes, right? And so you're paying your quarterly taxes from that money that you're setting aside, right? And then also, of course, from your business checking account, you will be paying your business expenses, right? And you're going to be taking a portion of the money in your business checking account and transferring it into your personal checking account, so that once it's in your personal checking account, you're going to take a portion of it to give, right? Because you want to always prioritize giving away a portion of your income, right? So you're going to take a portion to give, And then you're going to take another portion that's going to go into your personal savings account, which is another high yield savings account, right? And this is where you're going to be saving up your emergency fund money, right? Your emergency fund. Also, you're going to be saving up for any big purchases that you plan to make in the future, right? So you're gonna, so you want to take a portion and put it into your personal savings account, which again, high yield savings account, right? Make it a high yield savings account. And then also you take a portion from your personal checking account to pay your personal expenses, right? Now, keep something in mind. I want to highlight something that's very important. When you pay your personal expenses, you're always paying your personal expenses from your personal checking account, okay? And you're always paying your business expenses from your business checking account. That's very important because remember, you always want to keep your business finances separate from your personal finances. All right. All right. Now, also, you want to take a portion of your you want to take a portion of the money that's in your personal checking account and you want to invest it, right? And when I say invest, what I mean essentially is buying assets that will produce income for you, right? Right? That's the essence of investing, right? When you invest money, you are buying assets that will produce income for you, right? So you want to take a portion of the money that's in your personal checking account and you want to invest it, right? And there are three main categories of investments, right? Or in other words, three main categories of assets, right? You have the stock market, you have businesses, and you have real estate, right? So for example, buying stocks. Now, when I say, buying stocks, I don't mean buying individual stocks because I believe that's way, way too risky, right? I encourage people to buy index funds, right? And during one of the upcoming episodes, we will dig into that, right? About index funds and especially Roth IRA stock index funds, right? So that's an example of buying stocks where you're buying Roth IRA stock index funds, right? And so another category is businesses, right? Where you are business ownership, right? This is where it's like businesses that you own, but you don't have to actively participate in, right? Is what we're getting at here. So for example, like if you say, you write a book or you create an online course or what I'm saying, and then that way you put the work in up front and then the business, the asset will continue to generate income for you in terms of like this like a book or online course like royalties, right? And it will continue to make money for you without you having to continue to put forth effort, right? Right. So it's a passive income stream, right? So we talk about businesses, and we're going to dig more into that, about like, and there's so many different types of things that you can do to build business ownership, right? So we talk about stocks, businesses, and then the third one is real estate, right? So like rental properties, right? And of course, it'd be like rental properties where you have a property manager, right? So that it makes it more of a passive income stream. Because if you're managing it, then it feels more like, constant work, right? But if you have a system in place, then it becomes more of a passive income stream, right? Although, even with a property manager, you still have to manage the manager, right? So it's not as passive as like the stock market would be, right? Like with index funds. But also, and also we'll talk about private money lending. So all this, right? The main point of all of this is that you want to systematize your money. Now, number five, all right, the fifth and final main, point that we're going to be going over is build multiple streams of passive income. Because here's why this is so important. You reach financial freedom when your passive income exceeds your cost of living, right? That's the definition of financial freedom, right? So we're going to be going over all these things. Let me know if you have any questions, and I look forward to talking to you on an upcoming episode of the podcast.